Welcome back, guys. Let's do a quick update on the markets and everything going on. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. I'm not always right. I am sometimes wrong. That's how it is. That's what investing is. We're gonna cover the news first, and then I'll look at price action and the charts. So let's look at this article. Well, first of all, inflation and socialism light are just what the billionaires want. I'm going to read that. Let's just scroll through real quick. Yeah, big tech firms, all of them, not just, TikTok and all that. If you read that headline, you guys know what I mean. I just can't say it. I bought a truck. I murdered it out. It's all blacked out. It looks like a death machine going down the road. Off-roading tires, everything, just tinted, fog lights, the whole nine. You got to get prepared, guys. You never know what's going to happen. Being able to haul things, being high off the ground helps for off-roading. Whatever comes our way. Hope for the best. Prepare for the worst. This is funny. 108 billion. Bridgewater set up 50 tent offices in the woods outside of its headquarters for its traders. All right. So what I'm assuming is happening here, I'm not going to read the article, is he's probably trying to get out of the market. The problem is Bridgewater is so big. I mean, when your fund is like, I don't know what it is, but it's probably a significant size of the entire market. So to offload slowly and gradually, you have to scale out of the position. If you don't, what you're going to get is slippage. So if Bridgewater, sold $1 trillion worth of stock, instantly the market would just drop to like zero because there's no buying support. There's not enough buyers there to sell into. So you'll get huge slippage. So he set up tent cities outside of his headquarters, probably a bunch of traders. It's kind of like a fire sale. If you guys ever watch that movie Margin Call, good movie. And this is what happened, right? And in The Big Short as well. It's called a fire sale. You get everyone, and you're like, listen, here's your percentage of bonus. The bigger the bonus you get, if the more you could sell without the most amount of slippage when you're selling into the market. Because I have a feeling, I'm not saying this is what they're doing, but this is my speculation and theory. They're getting out of the market. The problem is they have so much capital. They have to have like thousands of traders in tents slowly selling off into the market. That's what I'm assuming is happening, guys. So if that's not the canary in the coal mine, I don't know what is. And obviously he knows something that I know, but what most of the market doesn't know. And, I'm sure he has way more insider knowledge, like way better than Bloomberg terminals and you name it. WTI holds its gains amid surprise crude build, large gasoline draw. My speculation is smart money knows that the price of crude is going to go up in the next years to come. So there is bidding out there for crude in anticipation, front running what's going to come. I'll talk about the charts. We'll look at the price. I do not, crude's going to sell off with the market, but I don't think it's going to sell off as bad as it did in like March, right? And a wave 2 of the cold, I don't know. They're pushing for it, maybe in Europe, But in the U.S., I don't think they're going to be able to pull it off. Um, it should be over with by now. I Again, the masses. I don't want to get into talking about it, but a new article came out. I posted in the newsroom last night. They're backpedaling like a lot of things. Like this might not even be airborne at this point. We don't know. Of course, they're canceling. I don't want to get into it. You guys could go to the website and read these. Okay. So let's talk about this. Was Monday's big sell off a plea for more stimulus? VI Shift Gold. Yes, it was, my opinion. Schiff, a lot of you guys watch his videos as well. He's probably the best financial economist, although his timing is never right. Okay, but his long-term view is aligned with mine, right? But yeah, the market needs more stimulus. It always will need more stimulus, no matter what. Why is that? Because it's dependent on it's a bubble and exponential stimulus. I'm talking previous stimulus. Like they can't do like let's say 5 trillion every year or something like that, right? I'm just throwing out numbers as an example. It has to be exponential. So if this year it was 5 trillion, next year it has to be 10. The year after that has to be 15. The year after that has to be like 30. That's how Ponzi's work, and that's how a debt driven plus interest, that's how it has to happen. Because it's all debt, and maybe not quite to that level of a multiple, but every year it kind of has to be more. Because as soon as they pull it away, the market's going to start falling and everything starts falling and the debts come due. And then no one's buying the treasuries. So that's why the case for hyperinflation, not out of the realm of impossibilities, it might actually be a certainty. If anything, it'll just be high running inflation. I just went grocery shopping again today. And like $150 will feed me for like a week. That's insane. That's not right. I mean, eventually people are gonna notice it. I don't know when. I don't know when. And I look around, I pay attention to my surroundings. I usually have the most food in my cart. And I don't even have a family. I have a dog, and even that is pricey. Yeah, so I'm gonna leave it at that. So yeah, Monday the market did fall, and it's big because they keep stalling on the stimulus, right? And they're probably gonna push the stalling and the infighting is gonna happen till election, if not after, right? Because we don't know how crazy it's gonna be. It could be completely banana republic style stuff that we're gonna see, especially with what's going on with the Supreme Court and Orange Man. He said Saturday he's gonna announce they're pushing it through. They're gonna try to get it through, which is a good thing for our freedoms, if anything. Yeah, so 138 billion. Bridgewater set up 10 offices, but they're still down 18%, 18.6% year to date in performance. They're down 18%. That's pretty bad. And he made up his all-weather portfolio, and you know what? He is one of the reasons why the market is so bubbly. It's because of his cookie cutter all-weather portfolio and his manufacturing of giant index funds like Bridgewater, right? So everyone's retirement just goes into a giant basket cookie cutter, and then everyone holds a ton of FANG stocks and it just keeps going up. Meanwhile, he's probably offloading onto his own clients, or who knows. I'm not saying that he is. I'm just saying, why would he set up tents for traders if they're not offloading? I don't know what they're doing, but very, very suspicious. All right, let's so in the newsroom I said the market's going to be green probably Monday and Tuesday, because normally when the market does sell off for a week, it's usually bullish the first 2 days going into Wednesday, and then starts selling off Wednesday afternoon into Friday. But this time it didn't do that. The market just sold off Monday. Today it kind of bounced. Today's Tuesday, by the way. It's the 22nd September. So let's take a look at the futures. Right now it's 9 p.m. U.S. Eastern Standard Time. I mean, it's mixed. It's very mixed. Gold actually fell below 1900 for a second, for like a day. I'll talk about gold. Let's get into the charts. Here's a macro look at the S&P 500. Goes all the way back to 1971 back here. This is where we are currently. So you can get that big macro sense of idea of where the market is. Looks good for a good correction, good size correction. As I've been warning for like a while now, and now we're finally seeing it, right? And I'm not like, I wasn't calling it too, I did call it too early because I was like 2 months early, which is pretty bad in the trading world, but I am a swing trader. I called it too early, a little too early, but in the end, I'm still right here for swing trading. All right, here's S&P monthly chart. Listen, next big support is around pretty much 3,000 on the S&P 500. And that's my target, immediate target. And then we'll see if we get a bid. By then, it'll be like late October, right? So we'll see if the market can sell off until late October on the monthly, because by then we're looking at, not only is there support from the price action here, a lot of touches around this area, but the 50, I guess, is gonna act as support. If we take it to the weekly, the 50-week moving average is slightly above 3,000. The 100-week moving average is around 3,000. But honestly, if we just look at the daily, my blue line is literally around 3,000 on the daily. So that'll be perfect. It needs to fill this gap, right? And it needs to retest this support, which used to be major resistance, and it's just a perfect round number. TA wise, perfect retest around 3,000. Perfect size correction. It really is. And it's a perfect size correction which would actually be bullish going into 2021. And not just that, the Fed's going to come out and they're going to promise more stimulus in 2021, and they'll put a stop to it. They're not going to let it fall below 3,000, and maybe it'll just trade sideways for a while. I don't know. We'll see when we get there. But I do not expect the market to fall below 3,000, because I know they're going to do something, right? So, and the fact that the dollar right now is bouncing, like I said it would, it's going to give them more room to print more, and they're just not going to let it go below 3,000. But right now, I mean, we're 300 points away from 3,000. So on the S&P 500, so it's very, very normal if it were to do that versus previous historical price action to retest this. Okay. Plus the 200-day moving average is down there, my blue line, my blue equilibrium line. It was just set up perfectly for 2021 and possibly, you know. But of course we're going to monitor economic data and everything going into the election and afterwards, and how crazy that's going to get. Now, if things get really crazy in the next 6 weeks, which they might, matter of fact, they will probably, and after, you know, the election, then you could see, then we might look for a deeper correction, which would be on the weekly. Then it would be pretty crazy. I mean, I don't know. You're looking at support at, again, at 2,800 and then somewhere around 2,600. 2,600 would be the worst case scenario. But for now, for the intermediate, shorter term, next 6 weeks, I'm looking at 3,000 as target area. Targets are never hit, but target area. Here's Apple. Really overvalued. This is just a 4-hour chart. Let's just take it to a weekly real quick. It's not a weekly. By the way, perfect shooting star on the monthly. That candlestick, that huge wick up here, huge reversal sign. And because it's so heavily weighted, cap-wise, Apple is in everyone's retirement portfolio. The way Apple goes in these fangs, the way the rest of the market goes. I mean, just a retest of $80 would definitely be normal. Would bring it back to somewhat not parabolic, super overvalued, right? All right. What else? All right, so the VIX, listen, the VIX, guys, the reason that thing doesn't do much and then all of a sudden explodes in price action and then sells off really quickly is because it's heavily manipulated by the powers to be. That's my theory. And it's a little bit delayed. Like, the market has to be selling off like 500 points to 1,000 like day after day. Fear has to grip the human psyche, and then all of a sudden the damn thing like pops and does a 10x. And with holding the VIX, in my opinion, not financial advice, if you're going to do options, you got to put them out. I mean, it's hard. I hold it. I do both, but I hold it, and then when it pops, and then I'll hold it for a little bit, not too long, like a few days, a week, or at the most a couple weeks or something, and then I'll scale out of it. Like the last time the VIX popped in March, right? It popped, and it went up 1, 2, 3, 4 weeks. You had 4 weeks to 5 weeks to sell, but 4 weeks. And this thing went up. And I caught this, by the way. It was one of my great trades in March. Hedged my entire portfolio. Yeah, it went up 5x. 500%, pretty much. But you had 4 weeks to hold and get out. So I'm looking for something like that again. Soon. It might not be 500x, or not 500, 5x, but something. All right. at least to $50 right now. So that'll give you like a 1x, which is pretty good for, if you throw on a call. But don't do that if you don't have like 7 years experience and all that. You just buy it, hold it, put on a small position, right? You never trade over 1% or especially 3% of your total account worth. That's how pros do it. All right. Euro versus USD. Oh, let me go back. I didn't finish. Let's look at the dollar and then treasury yields. Let me get a drink. All right, here's the dollar. So it popped right back up in my range. It looked like it was just going to sell off. And I told you guys, you know what? They're not going to let it fall that easily. And I told you, as soon as the equities market starts selling off, it's going to put a bottom in the dollar or the Dixie, the DXY, and they'll give you a nice rebound. And I've been calling it, right? And it's finally starting to happen. It could get back up around 98 handle. I don't think it's going to get above it. And it could get back up above. I mean, the 200-week moving average is going to act as resistance. But if it could break through that, as you can see right here, which would be somewhere around 95 handle, 95.5. If you get above that, then it'll run back up to like 98 and then probably start selling off again. And what this is going to do, it'll put a little bit of pressure on gold and silver, some more. And yeah, I mean, it's kind of like putting another, it's like the Fed being able to chamber another round. So for their next round of stimulus, which will probably come after the election. So I'm thinking up until then, the market will continue its correction, which is actually normal and healthy and fine. That should happen. Let's look at treasuries real quick. Also, with the dollar strengthening a little bit again, it's going to help for holiday sales for Christmas. For exports, well, U.S. is going to go net negative into trade deficit, but we will be able to buy more crap for the holidays, like for gifts. Yeah, yields falling still. It's at 0.66. I feel like it's just permanently suppressed yield curve control. And I think it's just going to kind of go sideways. Might hit 60, but I don't think it's going to go below that. And then the market's going to correct. And there you go. Here's the euro versus the dollar. Now, here was my range, right? Where's my writing on this? It's weird. Well, the range is in here between these two purple lines, and it's fallen back into the range. This was basically a false breakout, and I told you guys I was pretty sure it was going to be a false breakout because I was expecting the dollar to bounce as soon as the market sold off, right? So that's pretty much what happened, and now it's falling back into the range, and the euro is going to get weaker versus the dollar probably for a while. Maybe into like spring or summer of next year to 2021. Here's the Dow transports. I think it's hit a pretty much it's peaked out, and it's gonna fall back down, which will actually put a lot of weakness into the economy and the markets. So the Fed has a real uphill battle to fight here. With they're gonna have to pump a lot of stimulus going into 2021, and I don't know how they're even gonna justify it because they can't do any more lockdowns because of this cold, right? Because no one's gonna put up with it. I sometimes I've lost faith in people because they're all wearing the masks, and then, but at some point, I mean, I don't know. People are gonna like, they can't keep doing this. I mean, it'll put the rest of the small businesses out of business, and I mean, the problem is that they're printing and they're sending out checks, but $1,300 or $1,200, whatever it is, that doesn't buy you a lot. Not in the U.S. Not anymore. That's per person. So families actually get a lot more. They get like $5,000, but it really doesn't go far. And people are still blowing it on stupid things. They're just putting down payments on cars that they can't afford. I don't know, guys. E-mini light crude oil futures. Maybe a little bit of downside, but not much. The worst, I'm thinking like $36. Here's the U.S. dollar versus WTI crude. With a chart actually. Why did I have two charts? Hold on. Huh. All right. Market sells off. There is less economic flow overall going around in the West, at least. In the East, I feel like things have gone back to normal. It's not in the media because I don't want you to know this. But that's not why oil and energy prices are going to go up. It's, yes, demand has fallen, and it's probably not going to get back to 2019 levels. But all the stimulus is just going to make the value of the energy go up versus your paper currency. Also, we might see, this is Schiff, all right? This is where I'm getting it from. Schiff says a lot of these oil producers are going to go bust, and they probably will. So then there's going to be less supply put on the market. And then there will be a supply shortage, and then the prices are going to go up. But, this is still going to take months and years to play out. But for the short term, for the next, 6 months, I still think maybe oil price won't go up quickly, but steadily and slowly for the next year or so. Here's NASDAQ E-mini on the left here. In the center is S&P. On the right here is the FANG index. Here's the Dow. Here's the Russell 2000. Here's the Vanguard Global. They're all above their 100-day. Most of them are still above, except for the S&P 500. Most of them are still above their 50-day moving averages. So to retest the 200-day moving average on the weekly would be normal and would be a perfect correction for the U.S. equity markets and global. What else? Here's the FANG on the left. NASDAQ composite on the right. The two that are the most overvalued and they're the most bubbly, they still have a long way to correct. what I mean by correction is not a crash. I'm just saying correction. So a retest of the 100-day or 200-day moving average is not out of the question. I do not think they will let it fall to the 200-day moving average. I do think the Fed's going to step in. I just don't know how volatile and how crazy things are going to get because of the political banana republic style stuff that's going on in the US, right? So a healthy normal correction, well, for the FANG index would probably still take you near the 200-day 200. Yeah, well, oh wait, hold on, these are daily charts. I'm sorry. All right, so I was thinking these were weekly. These are daily charts. Okay, on the daily charts, the daily time frame, yes, a retest of the 200-day moving average would be completely normal and very healthy. Will the Fed step in prior to the 200-day moving average? I don't know. It all depends on the broader indexes, how far they're falling. I'm assuming if but these two, they would probably step in at the 100-day moving average to put in a bid. Unless, like I said, it gets really, really wild and hectic, then like we don't know who won basically, then yeah, these two could correct easily to the 200-day moving average, if not my blue equilibrium line. So in that case, having a hedge on your portfolio, especially if you're holding a lot of if you're holding anything, you should have a hedge. And you could have a hedge by shorting the market with an inverse ETF versus outright shorting. And then your hedge should save you from the drawdown. And if you're leveraged up, it'll save you from getting a margin call and blowing up your account. So I just personally have a feeling something big is coming soon. And Ray Dalio has tents outside his headquarters with traders. And there's a lot on the line in the US. There just is, if you haven't been paying attention. Here's the Russell 2000 weekly chart. At least a retest of 23.6 fib retracement, which would take you to 1400. That's what I'm looking at. There is support there and fib retracement. My blue line's there. And it's already broken. We have a death cross right here too, with the 100-day and the 200-day moving averages. Here's platinum. There's some support on platinum at $800. I think I'm gonna start dipping my toes into some platinum stocks, or once it hits like 800. Anything under. I'm not gonna put a lot into it. I just think that it's very undervalued for the peak of its last bull market was back in 2008. So on a macro cyclical, fractal, it's probably going to go back up in the next 5-10 years for one reason or another, for monetary value, for lack of supply, whatever. I'm not going to buy a lot, just although it is a great way to carry your wealth. Like just a little brick, would be very, very valuable. But it's cheaper than gold, so. But of course, you you could store a lot of value in it, but the time is to do it when the prices are low. That is now. So if I were to buy some physical, which I don't have any, but if I did, right, I'd hold it for like 5-10 years and then sell it. So I'll try to time it best as humanly possible. But the risk with platinum is when it falls, it's gonna fall quickly. So, and I don't know how easy it is to get rid of it. That's why I'm not gonna do any physical. Here's Tesla. This is a weekly chart of Tesla. It's still up there in the stratosphere. Just saying. I think it's overvalued. It's my own opinion. Consult your licensed financial advisor. But I'm keeping my eyes on it. By the way, they weren't introduced in the S&P 500. Apparently, their batteries, he missed another due date or whatever. Okay, here's oil versus gold futures. I don't really want to talk about that. All right, here's gold on the left. There's silver on the right. Let's look at gold and we'll look at silver then afterwards. All right, this is a monthly chart of gold. Monthly, every candlestick's a month. Right now, I have a 9 sell signal. It's perfect. It's already falling. It started falling sooner on the 8, but I caught that with the daily and the weekly. If you guys remember, I told you. I sold 2 months ago my leverage ETFs, and I took huge, massive profits on them. If you would have listened to me, did great. If you would have listened to me on a lot of things, you would have done really great. All right. Yeah, so possibly, 3 to 4 more months of downside. Maybe just 2. We'll see. Could be shorter because it all depends on what the Fed does. Let's take it to, but listen, I mean, this is a little over extended, right? I don't think the correction and dip is going to be that bad. 1700 1750 I think will be the extent of it, in my opinion. Let's go to a weekly real quick. Yeah, I mean, there is support at 1750 area. Let's take a look at silver. Which is awesome, so we could load back up on these mining stocks and ETFs, right? This is a monthly chart of silver. It's at 24 right now. It topped out at 30 bucks. Can it fall with the rest of the broader equity markets because of margin calls? Same with gold. Can it fall back down to 20 bucks or below? Maybe. I think it'll fall to 20. And then I don't know if it'll fall below it again. If it does, it'll be very, very short-lived in my opinion. But it might find some support in a nice bottom at 20 bucks. I mean, the 100-month moving average is at $21. Let's take a look at the weekly. Well, listen, I mean, we're looking at support at around pretty much 20 $8.80. And then all the way to 18. It's not going to fall. There's no way it'll, even if it goes below 20, I don't think it'll go below 18. Even if they're smashing it and whatever. So, but I am looking for it to test 20 bucks again. And then I'm a buyer at 21 an ounce, and then anything below it. Just scaling in, and then buying more silver mining stocks. That's what I'm going to do, personally. So, if this would load. Okay, here's S&P 500. Why do I not have... hold ratio? That is weird. I just lost a few things on my chart. Let's take a look at this. No, I don't want to give away any ETFs. And I'm not going to re-record this or edit it. So let's do this. I'll add GDX. GDX is the large. It's a ETF comprised of the large mining companies, right? The largest ones. I'm not saying to buy it or anything. I'm just saying this is the way to track the mining sector, right? It's just to get an idea of where the mining. Okay, well, you guys can see it. You know, it's this blue line right here. Okay, so when the S&P 500 is going to correct, right? Falls to, well, it's not going to fall that much. This is hard to see. Well, you guys can listen. Listen, it doesn't matter. S&P falls and corrects, has a healthy correction to 3,000. Or it's a deeper correction, right? Maybe to like 2,600. The more it corrects and the faster it corrects, margin calls are going to happen, and your mining stocks are going to continue to sell off. Especially the ETFs, which is awesome because it gives us another huge one-in-a-lifetime opportunity to load back up again, right? And then we're going to ride it right back up like we did. Well, at least this is what I'm doing. Like I did earlier this summer, right? We saw a bunch of 5x, 2x, a few 10x gains on individual mining stocks, and some of these ETFs did really well, especially if you put some call options on them. If you bought them, especially at that March low, when I was begging everyone, I'm like, listen, this is probably the greatest opportunity ever. So you did really well, right? 2 months ago, 2.5 months ago, whenever that was, I said, I'm getting out of the leverage ETFs and I'm selling some of the mining stocks. I took profits. I've been sitting on cash. I've been short the market. And now I'm looking for the next buying opportunity. And I think it's coming right now right now I'm not buying back in yet. I'm going to wait a few more weeks and maybe a month or two. We'll see what happens, right? Things get crazy, if you know what I mean. So, there you go. These are my thoughts and opinions. Could be wrong. Consult your licensed financial advisor. Before you do anything, have stops in place, emotions up. Alright guys, smash them likes. Put in the comment section what you want me to talk about. Share my videos. Only way my channel grows. What else? Go to my website if you want to be in the private group. Oh yeah, there's like a bunch of people. It's really weird. There's like 5 people who signed up. Then they joined the Patreon to join the private group. Patreon's not the private group. That's just for payments. You're supposed to follow directions. It's very simple. It takes like 2 minutes. So go on the Patreon, message me what I asked for, and then I will give you the links for the private groups. And people just can't follow simple directions. And you know what? If you can't follow those directions, then probably shouldn't be in the private group anyways. And yeah, so I have 2 YouTube channels, by the way. Actually, I have 3. It's very easy to find. If you look at my main channel, whatever channel you're on right now, go to the other channel. The one channel has over 8,000. The other has like 1,600. The other one has like a couple hundred. And then I'm on other platforms as well. Just in case, you never know. I'm not making as many videos right now because I'm researching like over 200 mining stocks for this dip buying opportunity. For the private group members, I'm going to start uploading some spreadsheets. What else? Later, you know, in the winter, I'm more active because I'm not outside doing stuff and preparing for then. I will do more tutorial videos and stuff like that. But put in the comment section what you want me to cover and talk about. I'm not going to get too conspiratorial. I have to be careful what I say because everyone's just getting all the channels are getting nuked. It's unreal. It's unbelievable. This is the world we live in, and this is the world we all deserve for doing nothing. All right, guys. Well, I'm doing something. I'm trying, right? But you know, and if you say I'm not doing enough, that's bullshit. Because the more vocal I am, the less money I make, the less following I get, because I'm getting throttled. I can't grow. And anything I'm risking by getting taken off. I mean, I'll be fine if I do, but you know, my channel I should be like at 80,000 subs. But I'm not because I opened my mouth because I live based off of morals and principles. And honestly, I mean, at this point, things are getting so bad that it doesn't matter if you have money. We're all going to suffer. All right, guys? So, smash them likes. Till next time.